Good morning from London. I'm Kriti Gupta alongside Guy Johnson and Lizzy Bird, and we're about an hour away from the opening trade. Here's what you need to know. France's budget standoff deepens as Marine Le Pen's national rally set out further budget demands after Prime Minister Michel Barnier offered a key concession. And the yen strengthened to 150 against the dollar as hotter than expected Tokyo CPI boosted rate hike bets out of the BOJ. And it's Black Friday. Retailers are gearing up for one of the most critical shopping days of the year in a key test of consumer spending. Lizzy.
Happy Friday, Kriti, and to everybody else. As we end the week checking in on these markets, we have futures pointing lower in Europe, higher stateside, but there's these thin volumes given the holiday period. As you say, the yen had strengthened past 150 per dollar, a touch weaker, but around, just hovering around that now, and Brent at $73 a barrel as we await clues on this OPEC Plus meeting that has, of course, been delayed to December the 5th. The countdown to the opening trade starts right now.
Good morning. So it's Black Friday, which apparently is a good thing, which is weird because financial markets usually put the word black in front of a day of the week when bad things are happening. Black Monday, Black Wednesday, we remember those kinds of days. Is France about to have its version of one of those sessions? We wait next week. Today's a critical day. We're looking for this S&P guidance in terms of the ratings. We've got all kinds of shenanigans happening behind the scenes in terms of setting out a budget. Do we get a budget? Do we not get a budget? What happens if we don't get a budget? What happens if we don't get a government? All of these questions, Kriti, are on the table. Are we going to see a Black Monday, Tuesday or Wednesday in France next week?
Maybe. I mean, the clock is certainly ticking. Marine Le Pen of the National Rally making the point that it's yesterday, saying it's Thursday. Michel Barnier has until Monday. He's already given that key concession on the electricity story, and they are still demanding more.
Exactly. They've made this concession, and then you have Jordan Bardella, the number 2 in National Rally, saying that this is a victory. Basically, you give them an inch, they take a mile. Surely this puts it even further away, not actually closer to a compromise.
The idea is to get, though, from a 6% deficit to a 5% deficit. The more you give away, the harder that presumably becomes. And this is the challenge that they now face. Do the numbers add up? And that's the question I think the rating agencies are going to have to ask themselves. That's the question the bond market is ultimately going to have to ask itself. We went through the Greece line yesterday. How much further does France drift away from France? And is this just, again, something that is a problem for France, or is this a wider European problem? And as you were highlighting yesterday, does it become a euro problem, or does it stay in the govvie market?
I'll go further. Maybe it becomes a global problem, because the last time we saw this, we actually did see a ripple effect into the Treasury market as well. Even though there isn't a direct relationship, there was that kind of trend that you see. 105 on euro dollar at the moment, but a 5 basis point move lower in the 10-year yield. That is light liquidity. It is a Thanksgiving, Black Friday kind of dynamic there as well. But I'm sure they've got one eye on the volatility happening in France and potentially Germany as well.
But as Jordan Rochester said to you yesterday, it's more about bunts for the euro than oats. So really, how much does it matter? How much is that level with Greece? Is it actually just a bit of a red herring?
I think it probably may be. But I hear what you're saying about the fact that the euro trades off bunts. But if it gets out of France and it becomes a wider problem for Europe, it becomes a crisis at the heart of Europe, then bunts will be affected because the ECB will have to react to this at some level. Talking of central banks, let's talk about what's happening with the yen. We've seen Tokyo inflation data coming out earlier on in the session, highlighting once again maybe this idea that the Bank of Japan is going to be hiking rates in December, potentially at a point where the Fed is cutting them, but that's more of a coin toss right now. You've also got hints coming out of some of the wage rounds that actually they are going to be more inflationary than originally anticipated. The sense seems to be certainly growing that maybe the BOJ acts, and we're seeing the BOJ pushing the yen through 150.
I mean, you mentioned the juxtaposition with a Fed cut and a BOJ hike. What about if the ECB goes for a 50 basis point cut? There's speculation about that. How much weakness could you see for euro yen if that happens? There's another juxtaposition.
Yeah, absolutely. I think that the common thread here is the oil story. And this is, I think, maybe a little bit of an unknown fact that Japan is one of the largest importers of oil. So as you see the oil story change out of OPEC, which you were mentioning earlier, out of the Middle East, or even out of the States in terms of that supply story, that immediately hits Japan. And so much of that CPI jump that has moved this pricing came from energy subsidies fading. Where have we heard that before? France, the UK, and a lot of the kind of energy consumption story in oil, in natural gas, and, of course, electricity as well.
Are you shopping?
Am I shopping for oil?
Ready to shop?
For barrels of oil?
I'm sure. So somebody once did buy a barrel of oil somewhere here at Bloomberg. I think that goes back into the
Tracy
annals.
Alloway, yeah.
I think that wouldn't surprise me. But shopping today, everybody's going to be out shopping. But I think actually, if you take a look at the GDP data recently, it does flag the fact that actually the US consumer continues to be in great shape, and as a result of which, we are likely to see potentially a very strong Black Friday. How strong will it be? How high are expectations?
Yeah, can the discounts lure shoppers to spend some of those savings? Yeah. Interesting to see, actually, this year, shoppers using ChatGPT to try and help find themselves a bargain, not something perhaps you could have used in previous years. And actually, a real tick-up in holiday travel if you compare it to the same period last year.
Yep.
That's how you shop, right? With ChatGPT?
Of course.
Yeah.
Yeah, I don't shop generally. That's generally my strategy.
But when you do, it's with ChatGPT.
Yeah, I did shop yesterday, which was a bit of a surprise for me.
Frugality GPT.
Yeah, precisely. How can I not shop? Yeah, okay. Lizzy Burden is the queen of frugal.
True.
So I'm not gonna take pot shots from her. But I think Kriti will be out there a little bit later.
I do. We talked about this yesterday. I have a lot of FOMO around sales. I am the prime target for a lot of these sales that get put up because I see a discount and I'm like, oh,
But this is
if
the
I don't
argument.
capitalize, I'm going to lose money.
This is the argument I used to have with Alex Steele. If something's on sale, it's on sale for a reason because nobody wants to buy it.
That's not that's not how things work in the States. It's not. You don't discount because it's poor quality. You discount because either you have excess stock or you discount because you.
Because people don't want to buy it.
Because it's Black Friday and it's the holidays and people shop. That's what people do.
Okay. We'll continue this argument maybe a little bit later on the show. What else have we got coming up? Anne-Laurie Keichel, founder and CEO of the Global Sovereign Advisory Group, is going to be joining us to talk about France. Max Kettner, Chief Multi-Asset Strategist at HSBC, is going to join us to talk about markets. Natalia Lekmanova, MasterCard Economics Institute, is going to join us to talk about why sales work or don't work or what's happening with the consumer. And Claire Playdale-Bouvray is going to be joining us to talk about why you should use maybe ChatGPT to use as a shopping tool. No, she's not. She's going to join to talk to us about her trip to California and what she's learning about what the AI trade looks like. She is, of course, a fund manager at Lion Trust, Lizzy.
So they're the conversations we've got coming up. In terms of what's on the day book, we've got Black Friday, as we say, US markets closing early at 10 a.m. Key Euro area flash CPI data and Italy CPI data as well, feeding into that ECB story. And we'll have speak from De Guindos, Kazakhs and Nagel as well. It's been a busy one. We've already heard from Schnabel, of course. And then we have this meeting, interestingly, between Iran, the UK, France and Germany to talk about its nuclear programme and European sanctions. I mean, obviously, to me, the elephant in the room here is Donald Trump. Yeah,
it's great. They can all get together, can't they? Have a nice little chat. But actually, the reality of the situation is we need to see what Donald Trump does in Washington.
Well, we also know that, I mean, look, Iran has been sanctioned left, right and centre from a lot of the major players around the world. But on the campaign trail, and even in the first Donald Trump presidency, Iran was a major kind of success story for him in terms of the assassination of General Soleimani, in terms of the additional sanctions, in terms of ratcheting up some of the oil supply as well. So the fact that they're talking about nuclear talks with not the United States, but with the UK, France and Germany, to me that signals is that Iran trying to perhaps get a little bit more support on their side before President-elect Trump
There's definitely been some signalling recently. They've downgraded what they say they're going to do in terms of what they're getting out of their centrifuges and how fast they're spinning them, i.e. the purity of what they're getting. They're certainly downgrading expectations there. The economy is creaking. Sanctions are having an impact. You've also got potentially the Israelis doing a deal with Hezbollah in terms of reducing that conflict, which could refocus attention back onto Iran. So there's a lot of pressure being piled on Tehran right now.
And on top of that, there's a read-through into the Ukraine and Russia story, because a part of these negotiations, or at least in the precursor to it, Enrique Mora, who's a chief of staff for the Spanish diplomat Joseph Borrell, apparently, according to comments over on X, had a frank exchange on the Iranian military support to Russia that, quote, has to stop and needs a diplomatic and regional solution instead. So, again, this is something that goes back and really relates to major conflicts in this region.
Let's talk about what else we need to know this Friday morning. The UK Parliament is holding a landmark vote today on assisted dying. MPs will decide whether to allow terminally ill people with less than 6 months to live the choice to end their own lives. It will be the first vote on the issue since 2015. It is highly controversial. Romania's top court has ordered a recount of Sunday's first round presidential election. This follows allegations of irregularities. These court concerns stem from claims that ultra-nationalist candidate Kalen Georgiescu benefited from, quote, massive exposure and preferential treatment on TikTok, this breaching Romanian electoral law. TikTok has denied the allegations. And Australia's government has passed a controversial law banning under-16s from social media. In one of the toughest crackdowns yet on platforms including Facebook and TikTok, the ban sparking criticism from big tech, unsurprisingly, and academics who argue it will be ineffective and may drive kids to darker online spaces. This has been one of the huge challenges that this industry faces, and it's interesting that Australia has accelerated this law in the way that it has. The pressure from parents. Here in the UK, it's about phones in schools. In Australia, it's about banning social media. This kind of force is gathering momentum. How ultimately does it change the narrative around social media? I think it's really hard to tell.
Yeah, I mean, you touched on the criticism, the obvious criticism from big tech, but this is hugely popular with voters, and the sad fact is that it comes back to teen suicides, which are a reality there, and they all come back to social media. I mean, to me, it shows how governments are still struggling to regulate social media, let alone thinking about AI.
Well, it's fascinating because we're talking about 16, the age of 16 in Australia, which, by the way, was when I got my very first Instagram account, and I'm still addicted. And so I'm not sure if going lower makes more sense there. France, Norway talking about 15, but ultimately this is very much a rest of the world story. In the United States, a ban on social media for young children, it's not really a part of the conversation the way it is. And I think for a demographic, and we're talking about it from a market perspective or a market share perspective and a growth perspective, it doesn't necessarily make a dent in the likes of Meta, Snapchat, etc. It's a debate, but it's...
Like TikTok, the fact that they wanted to ban TikTok in America.
But that's more of a national security thing than it is. I
appreciate that,
yeah.
but I think it feeds into, I'm sure there is a big kind of parental element to Lizzy's point about kind of how this plays with the electorate. I'm sure there's a big parental element that wouldn't be against that just from a kind of teen point of view.
Absolutely, but then there's the question of how you actually do it, right? So if you're talking about likes of Snapchat or Facebook or Instagram, what mechanism is there to do it? Whereas TikTok, you can use the national security reason. For American providers, you can't.
I feel like a comparison in the UK context is smoking, and actually that's easier to regulate than social media, but the kind of popularity of it is there in the UK context.
It's a tricky one. So it is a tricky one. How do you, if you're not going to ban, how do you prepare? What age?
When are you going to get on social media? I'm sure you have a big following.
That's a very different debate.
We'll get there for sure. It's certainly something where I'm not going to let them go. We're going to keep talking about this. Coming up on the program, Irish voters head to the polls today for a snap general election, which has seen housing and cost of living issues dominate the campaign. We're going to go to live to Dublin for the latest. Plus, Norway on the cusp of becoming the world's first all-EV car market. We'll discuss how the Nordic country is successfully transitioning away from combustion engine cars. But up next, we're joined by Tobias Meyer, CEO of DHL Group, for an exclusive conversation. Plenty to discuss there. If you have any questions of your own for us or for our guests, get involved in the conversation. IB plus BBTV Go is your function. This is Bloomberg.
43 minutes to the opening trade here in Europe this Friday. Let's talk about what we're seeing in terms of equity futures. As you can see, largely negative. I think, to be honest, with short closing days in America and probably trading desks not particularly well staffed, you probably need to wait until Monday before you get a clean signal out of these markets as to where risk appetite really is. I want to flag something else as well to you this morning, and that is that we are potentially seeing a meeting between the CEOs of these two banks, which is fascinating considering the manoeuvring that is going on behind the scenes and what potentially could be happening in terms of Italian banking integration. Remember, we're talking about various deals involving Unicredit, but the fact that Agricole and Unicredit CEOs potentially, and this is reporting that's coming out of Italy, are meeting today, could be really interesting, Kriti, to see whether or not a deal can be done and kind of where the chips are ultimately going to fall in terms of that space.
Yeah, it's a fascinating one, whether or not this kind of M&A European consolidation story really has legs in a kind of tricky macroeconomic environment. These seem like separate stories for now, but maybe in 2025 there'll be a little bit more rush to do it or a little bit less. A lot of that seems to be driven by some of the geopolitical story. We're talking about the political volatility in France and Germany, but of course in the United States as well. How are companies, how are banks, how are consumers positioning ahead of what may be a pretty volatile second term for Donald Trump? We've got the perfect guest to talk about just that. Tobias Meyer, DHL Group's CEO, is in London just to see us, I'm told. Joins us around the table. Tobias, a pleasure to have you on the program. Walk us through kind of this positioning story around Donald Trump. What are you hearing? Are people worried? Are you seeing that show up in the likes of some of the flows?
Well, definitely. I mean, it's a big topic. I was in South America just 2 weeks ago for an entire week, in Mexico, in Brazil, in Colombia as well. And especially the Mexican economy being so closely tied to the U.S., it's a big topic what will happen. Also, amongst our customers, we have supply chains there being closely integrated, a lot of parts coming from Mexico into plants in the U.S. as well. Yep. So there's concern around that. But also on, I think, the Pacific, the China-U.S. trade being quite a strong element of that being B2C as well. So it's discussion about de minimis again. The transatlantic being more about industrials like automotive.
Is there any evidence that people are front-running the tariffs? Are you seeing any stock build coming through, maybe in the States?
Hard to say, but there is good volume in the last weeks. We see that in ocean freight, we see that in air freight. The year has been quite volatile. We had very strong exports out of China for many weeks, on the ocean freight side especially, so strong growth there. But it has been volatile, so it's hard to call out whether there's really a strong element of that now.
Yeah.
You mentioned the South American aspect as well. Part of the Trump trade has been an expectation or a ramp-up of this friendshoring dynamic. Is there evidence of that? It felt like in the first Trump administration that was kind of put on pause. Could you see that restart?
Well, definitely as it relates to Mexico, I do think we see, for a variety of reasons, that this diversification of the supply chain that has been talked about, which for Mexico and the U.S. means also some nearshoring. I think for the rest of the world, this is quite different. We see more things shifting to Southeast Asia, but we've also seen customers putting production back into China, recognizing that this is the market where the supply chain is the deepest, the capacity is the largest, and many people still think that the next thing after China is China when it comes to manufacturing.
I mean, you're based in Europe. When we're talking about trade under Donald Trump, how do you think that Europe's going to retaliate? I was going to say negotiate. What are you planning for?
Well, that's a good question. I think 2025 is a year where the scenarios are unusually wide apart. You could definitely see a good scenario where indications out of the U.S., continued investments along with IRA, for instance, some tax reliefs, elections in Europe that lead to stable governments, that could influence confidence quite positively. But on the other hand, there is the scenario where support to Ukraine might not continue, that then weighing on confidence in Europe and tariffs coming into play. The European automotive industry is already in quite a weak position. So seeing tariffs on top of that would make people quite nervous. So the range of scenarios is quite wide.
There's a hard question I want to ask you. I mean, it's about the sad news of that plane crash, the DHL cargo plane crash near the Lithuanian capital. I know that a crew member died, 3 others were injured. I really wonder whether it's responsible to be using planes that first entered service in 1993. That's older than Kriti.
Well, honestly, I don't think that is a problem. Our thoughts are with the family of the deceased pilot and the crew members that are still in hospital. But operating such aircraft safely is something that the industry has learned over many years. I'm an aviation engineer myself, and I find it close to a miracle, the safety standards that we have achieved in aviation. If you compare this, particularly what we see in terms of road transport, if you look at markets like India, where we now have a 6-digit number of dead people on the road. So it is a very tragic event. And
you're not worried about the safety of the fleet?
No, I'm not worried about the safety of the fleet. The aviation industry has, over many decades, continued to lift the standards, address new challenges of different kinds, taken the right conclusion also from technical failures that we've seen in the past. So I think this industry really has a very good track record as it relates to safety.
Are you getting the aircraft you want out of Seattle? I think of you as an airline in a way. And when I talk to the airline bosses that I often talk to, they tell me they're not getting the airplanes they need out of Seattle. Is that a problem for you as well?
So yes, we still have some 777 aircrafts, freighters. We use new from-the-line aircrafts, particularly on the intercontinental lanes, also because of sustainability reasons. We want to have the most efficient asset to burn as little fuel as possible for the cargo that we transport, so that's very important to us. And we have initiated a new build program several years ago, and we're still waiting for some aircraft. And we do see that the lack of deliveries is causing issues.
So one of the issues that Ben Smith at Air France was flagging, that his maintenance costs are significantly higher. Are you having that same issue?
Well, we all need to still fly all the aircraft also on intercontinental routes. That's not good for fuel burn, and that's not good for maintenance as well. So you're
in terms of the margin, is that a margin impact?
I think for us, it's, look, we operate a fleet of roughly 300 units, so we're lacking a single-digit number, so I can't see that as a huge driver, but it's definitely more than an annoyance. More than an annoyance. Okay.
Well, I feel like that's the perfect segue almost to maybe something a little bit closer to home, and that is the German election coming up in February, Tobias. I'm not going to ask you what you think of the politics, but I am curious how it affects your business, and especially when things like corporate taxation is something that could very fundamentally change the bottom line of your company.
Well, I mean, we are now predominantly an international company. The great majority of our revenue is outside Germany. It still affects us. We are the universal service provider as it relates to the postal system, so we'll help with the ballots, with the mail elections. That's a big topic for us, that we're well set up to do that in February when voters hit for the polls in Germany. I think what is very important for Europe is to see a stable government, that, you know, we get out of this situation that is not only now the case in Germany, but we see this in France, we see this in the Netherlands, for instance, in Belgium, that we get into a setting again where we have solid governments with strong majorities or good majorities in their parliaments, and that we see politics moving forward.
Are you suffering from, just in terms of one of the factors that politics is interacting with at the moment is immigration and labour shortages, and is that something that you're experiencing right now? What kind of wage growth are you seeing? Are you seeing shortages of available labour? We're coming up to the holiday seasons. Is that an issue?
No, it has been much less of an issue this year, and that's a good sign for us, but not a good sign for the economy. So I do think there is some weakening, and we find it easier than in previous years to get labor for the peak season, be that in Germany, be that across Europe. I think structurally, Germany has changed some things in terms of legislation to enable more regular immigration based on merits. So we think that this is a good thing, but it still needs to filter through. There's a lot of bureaucracy around that as well. Bureaucracy being a big topic in Germany and Europe anyway.
Do you think there's too much bureaucracy in Germany? Like, I'm sure you're going to say the answer is yes, but how big a problem is it? Just to put, you deal with it at the coalface every day. Yeah, and you know, every piece of it is bearable. There's no doubt of it. If you take a single law and say, why can a large company not do that? That's a good argument. But if you look at the breadth that what we have built up over the last 20 years, you know, it's like a little stone put in your backpack every day. And if you do that for a long time, it just gets very heavy.
Tobias, I'm going to put you on the spot. 20 seconds if you can. DHL prides itself on being the first in a certain conflict zone and perhaps the last to leave. Are you positioning around the resolutions in the Middle East?
Well, we operate in different countries around the world. We operate across also geopolitical borders, and we'll continue to do that. We need to work with local governments to enable that. So that's what we continue to do. We're going to be present in those markets. We stick by the policy that you mentioned. We want to be the first in, last out, to support our customers, to support these economies, to continue to participate in the benefits of global trade. So that's what we've tried to do.
All right. You heard it here. DHL Group CEO Tobias Meyer joining us around the table. This is Bloomberg.
Minutes to the opening trade here in Europe. Let's take a look at what futures look like this Friday morning. As you can see, a largely mixed picture. US futures a little bit more positive. I'm not sure you're really going to get much trading in the States today. Everybody's going to be out shopping, enjoying themselves, of course, on Black Friday. European futures a little more muted. Stocks 50 and the CAC 40 down. As you can see, there's a bid back into the bond market. The one we watched today, of course, is France, where Marine Le Pen's national rally is demanding further changes to the French government's Budget bill. This after the Prime Minister, Michel Barnier, dropped a few plans to raise taxes on electricity. The government is, of course, facing the risk of being toppled if opposition lawmakers unite in a no-confidence vote, which may be required to get this budget through. The political uncertainty comes as France awaits a sovereign rating review. That will come later today. That could be a key moment in this story as well. And Laurie Keichel, founder and CEO of Global Sovereign Advisory, joining us to discuss all of this. Barnier is giving ground. Is it better for France to have an altered budget, a watered-down budget, than no budget?
Good morning. Well, I think we're indeed in waters that we've not tested in France so far, because there has not been a situation whereby there has been no budget. I personally think that it's better to have a budget that has been backed. So if it means no budget because nobody is backing it, then so be it. I think it's important to understand that because people have been talking about shutdowns or similar things that have arrived or could have arrived in the United States, this is not something that is possible in France because there would be special laws or special decrees that would be passed. So there are ways for continuity of the state. So I think the answer is it needs to be backed by the Assembly, whatever the result is.
OK, so let's talk a little bit about kind of how that's going to work. Say we do get a budget that is backed by the Assembly but has been severely watered down and looks different to the original budget. Can France get from a 6% deficit to a 5% deficit?
This is, of course, going to be the challenge because you have several cases. You have the cases whereby the budget as it is adopted, the budget watered down indeed is adopted, or indeed no budget. If it's no budget, France is going to run with 2024 numbers and hypotheses, which means that there will be no austerity. So in the two last cases, there is going to be pressure indeed to achieve those deficit targets, which means that probably they're not going to be achieved, which means that then afterwards substantial efforts will need to be made in order to achieve those deficits. So, of course, it will all be about talking to the market and convincing the market that France is still willing to work on its deficit and to work on this deficit path and bringing the finances back in order. But this is a path that will happen in the coming weeks.
But Anne-Laure, it's Kriti in London. The budget story, to your point, doesn't necessarily feel like it has as long-term of an effect on that deficit story. We're still talking about a solution that could be maybe 5-10 years out when it comes to that. What are the measures? What are the kind of the checkpoints or the things to check mark in terms of saying, OK, well, this is actually sustainable? I'm not really sure if some of these kind of concessions that they're talking about check that box. How are you thinking about it?
No, you're absolutely asking the right question, because none of what is currently discussed in a way addresses long-term issues. That's the reason why this budget and any actually solution around this budget are fixes, and they're temporary fixes. But indeed, they do not address issues that France is facing in 5 years, 10 years, 15 years. So whatever the budget and whatever the outcome, France has to ask itself, what does it want to do with its economic policy? Where does it want to put the investment? Where does it want to cut? In a much more fundamental way that what I would call quick fixes that have been discussed either to try to get a majority on this budget, but even on the budget that was initially planned. Yes, we are talking about a 60 billion initially, a 60 billion economy, which actually, when you look at it, are rather kind of like 30 billion cut. But this, in a way, is not going to address unemployment. It's not going to address growth. It's not going to address those long-term concerns that you raise. So that's the reason why, of course, what is happening today with the budget is important. But what is much more important is exactly what you said, is for France to have a long-term policy, a long-term vision on the economy, and then the fiscal and whatever needs to be done on the finances will follow.
We talked a little bit about earlier this week about the EU Commission and fines that could be imposed on the likes of Spain, Italy, the Netherlands, I believe, is certainly happening. France seems to be evading some of those penalties that are being put on some of its European peers. Walk us through the response that we may get from the European Commission should this budget not go through.
The European Commission is likely to be very unhappy about this and to also kind of like put pressure on France to put its finances in order. I, however, believe, okay, it's important, but it's not as important as the fundamentals of what we just discussed, which is that it needs to have, and France needs to have, and other countries also needs to have a longer-term plan that works about the macroeconomy and about the sectors in which the country wants to be present. So yes, the pressure from the European Commission is going to increase on France. That's extremely clear. But between us, in all scenarios, because even if it's a scenario where the budget is adopted, it's also going to say, are the projections really realistic? And they're going to put pressure for it and for France to put its finances back in order. So we're talking much more of a long-term fix that France needs to make rather than a short-term fix. And that's also what investors are starting to express. It's not just the immediate what's going to happen tonight with the rating agency, what's happening, immediately with the budget. Because again, there is no risk of shutdown. So this is clear, I think, or people are understanding it. But the question is much more fundamental. Where does France want to go with its economy? And that's what people are starting to question, to ask, and to want answers.
But Anne-Laure, you're emphasising the long term. What about if all of this short-term turmoil dents confidence so much that the economy goes into a tailspin and just can't recover?
I think we're not to this stage yet. I think we need to be extremely careful. And the market movement and the fact that the spreads of France, in particular vis-à-vis Germany, but also with all European countries, are diverging. And above 80 basis points, it's something that we need to take into consideration, and that is a sign that there is nervousness in the market. However, France is still able to fund itself in the market. France is still able to have very good rates in order to fund itself in the market. There is also going to be technicals because Germany and other European countries are going to issue less in the market. So France that needs to borrow more will benefit from this. So I think on this, yes, we need to be very mindful of the market reaction. It needs to be very carefully monitored and taken extremely seriously. But we should take it for what it is. Market is demanding answers of what is France going to do on the medium and long term on its economy. And as soon as this will be, there will be some answers. People will get more at ease with France and France credit, and you will see that the spread will come down. To me, yes, there is nervousness, but the nervousness is not that important in the spread differential. The point is much more long-term now, and the shift is much more on France's economy long-term.
I mean, sorry to play devil's advocate again, but surely there's got to be a point that the market says France is uninvestable. There's a tipping point where you're just looking for safety elsewhere, and it does matter.
Of course, you're absolutely right. It does matter. My point is to say I don't think this point has come. I think you don't play with those things, so you don't want to be close to this point. That's the reason why people need to be extremely responsible. But I don't believe we're close to this point at all. I think there are political discussion on the budget. I think it's good that in a democracy you have political discussion on budget and on other matters. I think the point is much more to then have, whatever the result of the discussion will be, to have a direction, to know where we're going, and to have a longer-term vision. But yes, you're absolutely right. The turmoil and the fact you don't want things to go out of control, that's extremely clear. That's the reason why people need to act extremely responsibly. But we are not in a danger zone in the sense of things are being not under control. They still are completely manageable if one knows how to manage them. But we need now, it's an urgent call to basically answer those questions that people are rightly asking about the French debt and the French economy. It's a very fair point. And it's only fair that France knows and starts answering them.
Loud and clear. Anne-Laure Kettner, founder and CEO of Global Sovereign Advisory, we thank you for that view. Let's stay with this question of political turmoil, but bring it to Ireland now, where voting's underway in the general election. Prime Minister Simon Harris, of course, followed the trend, bringing the vote forward from March in the hope of capitalising on a bump in support for the main parties in his centrist coalition. Let's get analysis now with our Dublin Bureau Chief, Jennifer Duggan. Jennifer, what were the main reasons that Simon Harris called his election early?
Good morning. Yes, Simon Harris saw a rise in popularity for both himself and his party after he took power 7 months ago. And there was a lot of pressure from within his party to, kind of capitalise on that. Also, the main opposition party, Sinn Féin, had seen their support decrease quite a bit over the past year. And also, the government was in quite an enviable position. Ireland has a considerable budget surplus, unlike a lot of other countries, most other countries in Europe. And so in October, the government were in a position to offer what's been described as a giveaway budget with a lot of tax cuts and even, one-off payments, energy supports. And so it was considered that that was part of the reason to be able to capitalise on some of that giveaway budget and support from voters.
So just talk me through the details of how that's actually played out. Ireland, we've just been talking about France. Ireland is in a fairly unique position versus many other countries around the world. It has this budget surplus. Some of that's been caused, of course, by the taxation story that we've been discussing on and off over the last few years regarding big tech. How has that factored in and changed this election?
Oh, I don't know that it's changed the election as such, but it definitely has provided an awful lot of context. The incumbent coalition of Simon Harris's party, Fine Gael, along with the other main coalition partner, Fianna Fáil, certainly have been running on a campaign of, that they're steady hands, that they're able to manage the country's finances, and that they are the ones to be trusted to do that. So I think it certainly has, put them in a very good position in comparison to a lot of other European countries. And certainly within the election campaign, politicians from all parties have been able to make considerable promises, both to fix a lot of Ireland's legacy infrastructure issues such as housing, energy, water, but also to make a lot of attractive promises to voters as well. We've had things from discussions around a new Ministry of Infrastructure, but even down to the promise from the Taoiseach's own party of €1,000 for every newborn baby in a savings account. So certainly it's put politicians here in a very fortunate position to be able to have money to back up election promises.
Bloomberg's Dublin Bureau Chief Jennifer Duggan walking us through, of course, the Irish election story. We thank you so much. Coming up, we stick with that budget theme. Budget concerns have also been a drag on the Brazilian real and local markets, of course, in the EM space. Look at those stocks that are exposed to that part of the world. Santander, just one example, is in our stocks to watch next. Stick with us. This is Bloomberg.
46 minutes past the hour, 30 minutes to the start of trading here in Europe. We've got a bit of French data to fold into the debate around what is happening in Paris. French CPI comes in a little softer than anticipated. I'm going to give you the harmonised year-on-year number, 1.7. Now, that's up from 1.6 the previous month, but down from the 1.8 that the market was anticipating. So is that a soft number, or is it pretty much an inline number? It certainly maybe cements the case that the ECB does a little bit more going forward. We saw soft German data yesterday. Does this enhance the case for maybe the ECB going 50? Let's have that debate right now. Mark Cudmore joining us to discuss what is happening in France and the wider Eurozone. Mark, what do you think? Is the case growing for the ECB to go 50?
It is growing, and I think it's there's quite a strong case that the European economy is in a very, very tough situation at the moment. I think this CPI print is so marginal that it's not really the game changer here. I think this isn't going to change the minds of people who weren't convinced already. But for those in the more dovish side of the spectrum, I think the argument's been building for some time. Absolutely, though, in focus at the moment in France is around this budget, and I think that remains a very concerning situation. And over the coming month, it's likely to get worse before it gets better. That's not a view on today's trading or even next week's trading. It's just that I don't think we've seen the extreme stress of this situation yet.
I mean, speaking to some ECB officials, they say that going by 50 would signal panic, and that is not what they want to do. But, I mean, if they did go by 50, and then we're talking about, the BOJ hiking as well, we've had that beat on Tokyo CPI today, how much euro-yen weakness could we see if you juxtapose the two?
Lots. I mean, look, I'm structurally quite negative on the euro. I think it's the currency that will see the outlet for a lot of the stress that we're seeing in Europe at the moment. European equities are already quite discounted. I'm not saying you want to be bullish them, but it's hard to be particularly negative. But the region's got growth problems, and I think that the bond situation in France is an extreme example of the stress we're going to see around a region that is struggling to get its fiscal situation in order. It doesn't have fiscal unity. It doesn't have the integration across the region that is needed for this tough situation, and it's about to get harder for it with some of the policies proposed under Trump. So I think euro is going to be the outlet for that stress over the year ahead, and I think on a short-term basis, maybe a different time span, I think the BOJ is moving towards a hike in December, so the yen's got more to rally. Yeah. So I think euro-yen is more downside in the short term. Probably after the BOJ in December, maybe the yen leg is a bit different, a bit separate, and you focus on euro against something else.
Mark, what has the biggest ripple effect when it comes to global bond markets or global currency markets? Is it a potential freak out in the French space and the OAT space, or is it more BOJ hikes and the weakness in the yen? What has the biggest global ripple effect?
If we have a freak out in France, it's definitely France. Again, I don't want to say that my base case call is another Eurozone bond crisis. I don't think we're in the same situation. There's different tools in place. That's not my best case. But I think that there's a non-negligible chance that the France situation gets extremely stressful. And Lizzy mentioned the point about the ECB doesn't want to signal panic. The history of the ECB over the last 20 years, and I'm not sure they've changed, is that they basically don't solve situations until they're suddenly forced to solve them. They appear to go over the edge, they appear to go too late, and then they panic. And I fear that might be the game plan here in France as well, that it's going to get much worse before it gets better and they resolve it.
Bloomberg's Markets Live executive editor Mark Cudmore joining us with his analysis this morning. You can get more from him and the team. Just type in MLIV Go on your Bloomberg terminal. Let's go from the macro to the micro. Joe Easton standing by with our stocks to watch. Joe.
Morning, Kriti. So we're watching Brazilian exposed stocks today following a sell-off in the country's assets due to worries about the budget. Here we can see the rise in the dollar real over the past couple of days, and we also saw Brazilian stocks dropping as well. Now, in terms of the companies to look at in Europe, there are several with pretty big exposure to Brazil. Telefonica, Santander and Carrefour all get more than 20% of their sales in the Latin American country, and also MAPFRE, the Spanish insurance company, just below 20% in terms of their sales generation over in Brazil. So all of those in focus potentially in European trading today. Then in terms of Bayer, there's some upbeat commentary from an interview with Bloomberg. This is from the company's pharmaceutical head, who said that concerns around a potential expiration in patents may be actually overdone. They say the expiration is not so much of a cliff, it is actually more of a dent in terms of the potential effect on their earnings. So that does seem to be a bit more upbeat than expected. That stock has been slumping this year, partly due to worries around those patent expirations. So I would expect that to be a bit of a relief for some analysts today. Then staying in Germany, we're looking at Hugo Boss after a big drop in that stock yesterday. A city in Germany is potentially opening a probe on the company's CEO, according to local media. Now, the company did tell Handelsblatt that the CEO has been compliant with regulations, and we've also reached out to them for a comment ourselves as well. But this stock has been part of the big sell-off in luxury stocks this year, down 50% already in terms of including yesterday's slump. So we'll keep an eye to see if that one rebounds today. Then in terms of analyst ratings, a couple of decent buys. We've got Anglo American, that's a buy over at Jefferies, Accor in hotels, an overweight at JP Morgan, and a bit of a contrarian call in defence. BAE Systems is cut to underperform over at Boffa, potentially one to watch in London today.
All right, Joe Easton, our equities reporter, walking us through some of those stocks to watch. I'll add a couple more, and that is Unicredit and Crédit Agricole. There are some reports coming out of Italian newspapers suggesting that there will be a meeting between, of course, Andrea Orcel and his Crédit Agricole counterpart, not to mention some reporting that he could potentially be expressing an interest to buy Crédit Agricole's roughly 9% stake in Banco BPM. It's, of course, been moving some of those banking stocks on both in Italy and in France as well. Let's see if it does the same today.
Are the French going to sell? That's the key question. That's the question that I think is being raised. Messagero certainly raising that as well. Corriere della Sera talking about that meeting taking place soon. Is it happening right now? So what role is Agricole going to play in this process? Could it step aside and allow the consolidation, and how will the Italian government digest that, I think, is going to be key. But it's interesting that these kind of lumps of stocks that are floating around in some of these European banks, you've always talked about the idea that it's weird. They all seem to own bits of each other.
It is
and now some of that's being maybe sorted out and the jigsaw puzzle being rearranged.
But there's just such hesitation for this kind of banking consolidation, yet there's already pieces of it.
Yep.
I don't fully understand that dynamic. We should also mention the reports say that Andrea Orcel will also be meeting with Amundi, AXA, BNP Paribas, and Lazard as well. So it's not just Credit Agricole, but that one, of course.
But they're all going to be shareholders as well.
Fair.
So we'll see exactly how they react to as well. He's basically on a mission to. He's on a shopping trip. It's Black Friday. Andrea Orcel is going shopping in Paris today, it seems.
Maybe perhaps not with the discounts that everyone else is getting on those special goods.
I don't know.
I think he's running into some hot water, though. He already kind of got into it with the German government. I don't think Rome was very pleased with him on Banco BPM as well.
Shaking things up.
And does Europe like change? Or is that something
I think evidence would support that change comes slowly and then very fast. And maybe this is one of those examples of that happening. But yeah. Andrea Orcel, it's Black Friday. Why not? He should get involved in the action. Lizzy and I aren't. You may be. Orcel may be getting in there as well.
I feel like that's good company to be in for me.
It probably is, to be fair. We need to talk about what is happening with this market open this morning.
Yeah.
I'm not sure you're going to get a clear signal on what actually risk sentiment looks like, Lizzy, until Monday. The Americans need to come back.
No, and we need to get that rating on France
That's also a
after
good
the market
point.
close, and then we'll see the reaction next week. And look, these are thin volumes. It's not too much to be reading into today's action.
We should also mention futures are in the red at the moment, but the bond market to me is interesting. The French bond market not doing much, but the 10-year over in the States down about 5 basis points. We're going to dive into those dynamics. The opening trade is up next. Red on the screen. We'll see if it turns around in a few minutes. This is Bloomberg.
Good morning. A couple of minutes to go until the Friday session starts here in Europe. Yesterday was a non-session. I mean this in a number of different ways. First of all, just show you to this chart. That's where we started. That's where we finished. We barely budged. We had a little bit of volatility in the middle of the day, but we really went nowhere yesterday, and volume was epically light. The Americans are out. It's Black Friday today. You get early closes. I'm not sure anybody's really going to be at their trading desks. As I keep saying, I think Monday is going to be the clean signal in terms of risk appetite and what happens with the tech space in particular. Lizzy, tell me there's something exciting happening in futures.
Well, sorry to disappoint you, Guy. It is Black Friday. As you say, it's thin volumes. Futures pointing lower here in Europe, down 0.3% on the Stocks 50. FTSE 100 going to do slightly better, less badly, but the CAC on set to be down 0.4%. It was interesting yesterday that actually French stocks managed to eke out gains despite the political turmoil, but that's partly perhaps because of the concessions granted by Michel Barnier and the finance minister as well. But it looks like it's going to be a negative session in Paris this morning, Kriti.
Yeah, fine. I'll just do all the heavy lifting. If none of you guys will give me the juicy stuff, I'll do it. When it comes to some of the stocks we're watching, the banking sector seems very much in focus. Lizzy was talking about some of the turmoil in France. The banking sector in France also very much in focus, given some of the Italian newspapers reported meetings with Andrea Orcel with the likes of Credit Agricole, Amundi, Lazard, among many, many others. You're also keeping an eye on Brazil-exposed stocks. The budget story is not just a French one, it's a Brazilian one as well. For Europe, that means the likes of Telefonica, Santander, Carrefour, all get more than 20% of their revenue in Brazil. That matters for when you start to see those kind of volatilities in the EM space. You could have a ripple effect, Guy, in some of these European markets today.
So we're looking for reasons why Europe may move this morning. There's a few of them. Let's see if any of them turn out to be actually producing some reality. Here we go. Time for the opening trade. Friday morning. Black Friday. See, on any other day, if you apply black to Monday or Wednesday, people start to get scared. Black Friday apparently is OK, but we're going to call it mildly Red Friday, I think, at the get-go of European trade this morning. As you can see, the FTSE is down a staggering 0.1%. The Stock 600 can't even manage that. It's down by a staggering less than 0.1%. The IBEX, though, is moving to the downside, and maybe that is the point that we've just been hearing about what is happening in Brazil. There's also the whole sort of story around what is going on in Mexico. The IBEX seems to be suffering more more than most. The DAX clearly has no news. It's starting early. It is down by 0.1%. The CAC 40 is down by 0.4%. We watch for this rating story a little bit later out of Paris. I would give you the full deck, but the SMI has decided it's going to take a little while to get things going. So, Kriti, let's talk about what is going on in terms of that sector story.
Well, the underperformance in France is absolutely one to zero in on. When you look at some of these moves here, you are seeing a lot of it show up in the oil space, actually, and that is something that we're going to keep a very, very close eye on. We're going to keep an eye on the basic resources as well, because that's where you start to see a little bit of the diversion. This morning, basic resources actually in the green. So, for example, some of your best performers to the upside are likes of Glencore, Rio Tinto, et cetera, et cetera. But then on the oil space, that's where your underperformance comes from. Your likes of Total, BP, all in the red as well. That tech outperformance that I felt like we saw yesterday, taking a little bit of a breather, down about 0.2%. But, Guy, you know where I'm going to go with this. It's all about Spain for me, because that is actually where you are seeing some of that EM trade really show up. And you can see it on your screen right now. Banco Santander, for example, down 0.8%. BBVA, which is a big part of the Trump trade off Mexico, also taking a little bit of a beating this morning.
Miners are up. Maybe that's a China trade. Maybe that's helping out a little bit as well. Anglo-American, Glencore, Rio Tinto. Maybe some more positive news coming out of China. Nestle's down. Nova's down. These are the points, the drag on the stock 600. Santander's down a little bit. That Spain story that you were referencing a little earlier does seem actually to be in the markets. LVMH is down a touch. I'm struggling to see a clean, clear narrative emerging from this market this morning.
Yeah, look, the French banks all in the red. BNP Paribas, SocGen, Crédit Agricole. One that we were told to keep an eye on by Joe Easton was Hugo Boss. That's actually down 1.3%. As he mentioned, you've got this potential probe on the CEO, the company saying that it is compliant, but a sell-off yesterday and it continues this morning.
BAE Systems is down as well, a downgrade on that stock as well this morning. So there's some individual names that are moving. The miners are up a little bit. We've got French banks in focus.
I think the banking story is really where we want to go next. Let's get an expert. Max Kettner, Chief Multi-Asset Strategist over HSBC. I know. That one was a tough one to swallow.
Sorry,
Max.
Shouldn't have done that.
Max is a friend of the show, so we can give him a little bit of grief. Max, walk us through the banking story here. I mean, we talk a lot of this on an individual basis, but is there a reason to be exposed to European banks right now?
Yeah, look, I think more to the US banking story. If I looked at banks, I think I'd really go into the US banks now. You've got the deregulation story. You also have the story around actually a new capital market cycle sort of having started already in the second quarter. And now, of course, you've got election-related uncertainty gone. We've had a huge outperformance of Eurozone banks and European banks in the last really 3-4 years. Of course, a little bit of that has been reversed with the outcome of the US election, but there's an awful lot still to go. So to me, as rates come down in the US, in the Eurozone, in the UK, pretty much everywhere across the world, you want to be more exposed probably to the fee-based, to the IB kind of exposed banks, and that's more in the US. It's more the large banks in the US rather than the European banks.
Well, that's a real turnaround, because that's exactly what you didn't want to be exposed to, say, two years ago as well. You wanted the ones that had more of the trading volatility as well. It feels like for the European story, though, so much of that was driven by buybacks, by dividends. Is that still the case for the next 12 months?
Yeah, I think so. I think, we're still seeing that. We're still seeing that in the mega caps as well. We're seeing that particularly in the US, of course. So to me, it's mostly a US story rather than a European story. Let's face it, in Europe, I think the story is probably one around the mega caps. Guy was just talking about it, about Nova and all these. We can talk about all the relative growth divergence or the politics, the French politics and the German politics and all that. It's very fun to talk about. But at the end of the day, why did Europe not really work in the last, let's say in the last year, really, was because the mega caps in the US, which are pretty much exposed by and driven by one factor, right? Give or take, it's all pretty much tech, AI, the
momentum.
And then you look at the mega caps in Europe. You've got Nova, which is pharma. You've got ASML, which is semis, right? You've got LVMH, which is discretionary, which is luxury. You've got Nestle, which is food. But it's all driven by different kind of factors and different kind of exposure. So the problem is, if you're making the call that European equities, the underperformance is really going to reverse big time against the US, you're not making really a call on relative GDP. You're making a call on these mega caps that are all driven by different sets of factors. You're really making a call on those working again.
You wear a Bavarian jacket. I feel like I'm going to get you one of those kind of American stars and stripes all over it, because I feel you've been
looking
with like a bald eagle
so
on the
much.
back.
Yeah, I could see him in one of those, definitely.
Somehow I can't. I don't know.
We'll sort it for
But
you.
you've been...
It's Black Friday.
Precisely. I'm sure there's one out there to buy on
I did
discount.
forget about this. I just remembered I need a new lawnmower. Thank you very much. Thanks for telling me that it's Black Friday. I completely forgot about that.
We're here to provide...
It's already worth coming on set to.
This guy's kind of shopping.
We provide many services. Lawnmower advice is definitely not one of them. Though I do have certain things offline that we can talk to about that. Let's talk a little bit. Why do I change the trade, though? To your point, why would I want to get out of that American trade that has worked so strongly and the momentum is there? Is there anything that's going to knock it off its perch?
There might be, maybe in Q1, you can sort of, not the US trade, but perhaps a little bit other things like Europe, where you're saying perhaps people are getting then a bit more excited about the German election. Maybe there is a few bits of good news around perhaps a bit of change in the fiscal stance in Germany. That could be one, potentially, for a couple of weeks and months. But you see the excitement on my face. It's rather contained, shall we say. So I don't think that is something that you want to be putting on for 6 to 12 months. I think the earnings story, the relative earnings story, is just so
Do I change anything in my portfolio out of 24 into 25?
Right now, no. Right now, honestly, the pretty much our outlook has been a Control-C, Control-V exercise. Probably shouldn't be saying that on TV. But, you know, Control-C, Control-V exercise, with the only exception that what you can do now relative to 3 months ago is also by duration. Because obviously we've had, in the US, we've had such a massive repricing. We've had a terminal rate of 270 going up to 380. So you're sitting there now. It's like, well, ideally, I kind of want to have sort of a 4-ish to be properly pulled up on duration. But it's no longer actually paying to be massively short treasuries either. So that's the only really part now where I'm saying I'm finding a really, really tough time to find anything where I'm massively bearish on right now.
But like where you're saying don't get bogged down in the day-to-day, focus on the long-term policy, is it all that clear-cut actually what's going to happen in 2025? Can you actually just copy and paste everything over? For example, you know, do we know how deep the tax cuts will be? Do we know exactly how Scott Bessent is going to act? Do we know exactly how the Fed is going to have to react to that? I'm not saying that, you know, the big picture doesn't matter, but maybe it's not all as obvious as it seems.
Yeah, 100%. But let's take France, for example, next week. What you've got is probably, if the French government falls, you've got the Bund OAT spread probably widen. If it doesn't fall, it probably tightens. It's literally 50-50. Is that a great trade? Do you want to go into that and be like, yeah, I'm just going to call politics now? Not really, right? It's a really 50-50 call. So the problem is a lot of those macro trades, a lot of those are really looking like 50-50. The big picture for me, and that's perhaps where I make the distinction between the politics or the day-to-day politics and the policy setup. It was very similar in 2017, very similar in 2019. I remember we were on set in 2019 and we were talking day in and day out about trade tensions, trade tensions, trade tensions. And what happened? The NASDAQ was on a tear. Because what mattered was the Fed was making a U-turn, real rates went down from very positive to actually down to negative, and that drove equities. It drove the NASDAQ, it drove the S&P, it actually drove IG spreads, high-yield spreads, EM spreads, it drove pretty much everything. And I think that's very similar to now, that you've got a Fed that's still saying, look, hold your horses, we're not going to cut too aggressively, but we're still going to cut. This is still a cutting cycle, right? We're not going to cut every meeting, fine, but as long as you're cutting, you're absolutely fine with that. You throw on tax cuts, perhaps, you throw in a little bit more deregulation. I think what we're underestimating is how strong of a growth picture we still have in the US. You know, we've been talking, and you guys probably have been talking with loads of guests in the last couple of months and quarters, really, about how obviously the US economy is slowing down. And then you look at the data and we're like, where is that? I can't see it. So we're starting from a really, really great starting point. And now we throw in all these extras. And consensus are still saying that growth next year is almost going to be half of the magnitude of this year. It's great. It's a fantastic setup.
Max, let me lob a viewer question at you. They've sent it through on IB. They ask, in Asia, in terms of equities, what's your favourite play? Japan, China or India?
I do. So we're overweight in Japan right now, at least from a global standpoint right now, simply because when I look at Japan, it is for us a bit actually of sort of a US rates hedge. if we're wrong on US rates, if really the 10-year does push beyond 4.5, you can reasonably expect dollar-yen to go a little bit higher. So if you're going into Japan hedged, FX hedged, that is typically the sort of least Goldilocks market, or the market that really works the best if everything sells off across the board. So that in Asia right now, at least from a sort of US rates hedging perspective, by far the best market for us right now.
I want to go back to the point that you made about adding duration. Why in the world would you add duration if there is a budget concern in the United States, a budget ceiling that hits 10 days before the U.S. president, and you're talking about hedging your U.S. rate strategy at a time when the Fed isn't really looking likely to move by the same margins that you're seeing in the rest of the world? Why would you want more exposure to that?
Because we've been max underweight. Simply because of that. So if you think about this, we've since August and really since September, we've been maximum underweight in rates, maximum underweight in US Treasuries. Now you've had a repricing of 110 basis points in the terminal rate. And you look at that, I'm like, yeah, maybe there's a bit more to come.
That's more in kind of the front end slash kind of middle in the belly. That's not necessarily in the long end, right? Like in the 30-year, we're going to see the biggest and more volatile moves when it comes to the budget, the housing, et cetera.
Yeah, but we've still seen the 10-year move up almost 80, 90 pips, right?
Yeah,
so we've
fair.
still seen that. And to be fair, I think, to your point, I can see that. I can see that as the Fed perhaps, you know, just let's go through a scenario, thinking about it. Let's say if the Fed really starts to come up with much more hawkish SCPs, perhaps, you know, changes the 2025 dot, gives us a bit higher inflation forecasts, perhaps even higher growth forecasts, and then starts communicating a pause maybe into January even, right? And then you start to see the long end bowing out again. I think then you want to buy it because, let's face it, what you're seeing at the moment is loads and loads of discussions around tariffs and how inflationary are they? Are they going to add up 0.5%, 1%, 2%? The reality is what we've had in Q1 this year is we've had super core inflation in the US at a 0.9, 0.7 and 0.5% month-on-month rate. We had these massive motor vehicle insurance resettings, right, in the first quarter. That is unlikely to come at the same magnitude again in Q1 2025. What that means is we could actually have that underlying inflation measure from the Fed go down in Q1, which would be super. It would be great, right? Imagine we could have a re-acceleration of growth. We could have at least stable growth, right? At least re-acceleration relative to consensus forecasts. But actually the Fed's underlying inflation measure going down at the same time. It's like almost, it's honestly, it's like Goldilocks on steroids then. Right?
Lawnmowers. It's time you went. You've got to go and buy one. Black Friday.
There we go. Got another one.
Something to add to the list, the overweight list. New lawnmower. Max, nice to see you. Thank you very much indeed. Max Kettner, Chief Multi-Asset Strategist, joining us from HSBC. I see a line saying Bank of America strategists turn overweight on Europe. We'll maybe get Bank of America in to talk about that call and figure out what is happening there. Let's talk about the core six, talk about what is happening here. As you can see, a fairly mixed picture. I'm not sure today's giving you much of a read. Ferrari's a little soft. It's had a decent run recently. Chips are tracking a little bit higher. Schneider looks like it's on the upside. I wonder whether you rotate money out of French banks into other areas of the French market if you have a French mandate. I don't know. LVMH up by 0.1%. Let's check some individual names, talk about what is happening here. Joe Easton, over to you.
We are seeing some weakness in these Brazil-exposed stocks, guys, particularly Telefonica and also Santander as well. Now, remember, some of these companies earn around 20% of their sales in Brazil, and we've seen a sell-off in the assets in the Latin American country due to budget worries. Also seeing a little bit of weakness coming through into the brewer AB InBev and also the insurer MAPFRE over in Madrid as well. But pretty sizable moves lower in Telefonica and Santander. Pretty big companies as well. So a notable decline in that one. As was discussed a few moments ago, Hugo Boss was weakening once again, down around another 0.5%. It fell 8.5% yesterday on reports of that probe on the CEO. As we said earlier, they have told Handelsblatt that they are complying with all the regulations. So we'll wait to see if we get any more comments on that one. Then in terms of UK M&A, Direct Line yesterday had that big rally around 38%, and today it's up another 2%, but still trades pretty significantly below the 250 pence price on that one in terms of what the bid was. So potentially some people not convinced that the deal with Aviva will go through. Will we see another bid coming in? That's the speculation at the moment, but definitely one to watch, another gain for Direct Line. Now we've also got TIF. Now, this is a fluid brake system maker, supplies into autos. We had a Bloomberg exclusive yesterday that a deal was coming, and we have got news that a £1 billion takeover has been agreed. That's broken on the terminal today. It's around 200 pence for that one, so we're edging closer to that in terms of another UK M&A deal. Then in terms of the broker moves that we had, the big one that I liked was BAE Systems, because this is a really contrarian call for BAE. That one is slipping at the moment. It's down a couple of percentage points, one of the worst performers today. The other one, we've got those Anglo-American. Now, this one also potentially boosted by the move higher in commodities, as was discussed on the show earlier. But we've got Jefferies saying you should potentially be buying this one. Some speculation on BHP still, but a mover over in London today.
All right, Joe Eaton from our equities team with some of the stocks that are moving. The stock 600, though, flat to the downside, not moving really at all. But coming up, we're going to take you to Norway, which is on the cusp of being the world's first all-EV car market. That's today's big take, and we'll bring it to you next. This is Bloomberg. Welcome back to the opening trade. To Norway now, which is on the cusp of completing a transition away from the combustion engine cars, thanks to targeted incentives that make electric vehicles an easy choice. It really is a window into the future, and today's Big Take explains how that transition happened with such remarkable speed. We can speak now to our energy reporter, Kari Lundgren, who has more for us from Oslo. Morning, Kari. You did a mini road trip for this story. How are the roads of Norway looking now?
Good morning. Yeah, it was a great way to actually follow the journey that Norway has been on. You don't actually have to go that far out of Oslo, a couple of hours north, and you can come to a valley where there is actually a very low EV penetration, only about 2%. And in that valley, people are saying the things that you heard 10 years ago in Oslo. People are saying, oh, I'm worried about the battery running out. I'm worried about the range, all those sorts of things. But then you realize rapidly as you move into Oslo, there's a great charging network for EVs. There's 40% of the cars on the road in Oslo here. And it's all those hurdles, all those habitual hurdles. People have overcome those and are actually very happy using their EVs. And like I said, 40% of the people here in Oslo are using them. So something's worked.
Kari, Norway is enormous. And yes, this may work around Oslo. Does it work for the wider country? There is this idea that you get to 100% EVs by next year. Given the scale of the landscape, is that really possible?
You know, the EV association here and the car makers and companies like Circle K have been putting in a massive amount of effort to make the charging network work. So Circle K, they're actually ripping out petrol pumps to put EV chargers in place. There's a lot of 200 kilowatt chargers that I saw. Those sorts of things make charging quite efficient and fast. And so actually using an EV, I mean, I drove a long distance on this road trip, and it was actually pretty easy, especially once you started planning a little bit. You know, made your stop at a good restaurant you liked or a grocery store, used the time. It was actually pretty convenient.
All right, Bloomberg energy reporter Kari Lundgren, I think getting a pretty fun assignment. We thank you so much for walking us through that story. Of course, this is going to be something that a lot of European governments are talking about, a lot of American governments are talking about as well in terms of rolling back some of those subsidies, the energy transition impact having a little bit of an effect on the commodity story as well. I want to get a quick check on oil prices on that subject. Brent crude trading at a 73 handle, NYMEX right on its heels trading at 68. That spread to me is really interesting. It's a $4 to $5 spread, which usually we get in times of geopolitical conflict. But that premium, that geopolitical premium baked into the price seems to be one that hasn't really moved in quite some time. I want to stick with that theme. A lot of it has to do with some of the output coming out of Iran. And sticking with the Iranian story, they are expected to hold talks about their nuclear program with the UK, France, and Germany. The European Union set to mediate the meeting in Geneva today. Let's bring in Bloomberg's Golnar Matavelli, of course, has been monitoring this story very, very closely. Golnar, walk us through this dynamic. Why now? What are they hoping to get out of it?
So I think these talks actually go back to the UN General Assembly when Iran's President Masoud Pezeshkian, who was very recently elected, went to the UN General Assembly, and he very much went with a kind of tacit green light from the Supreme Leader Khamenei to approach the Europeans, to talk to the West, to open some kind of dialogue with a view to eventually achieving some sort of sanctions relief for Iran's economy, and also, very importantly, to ease tensions with the US. It's very important for Iran, for the stability of its economy, to be able to have some kind of manageable stability with the West, particularly with the US. That's very important for the country, and they haven't had that for a long time now, and they need it because inflation is extremely high in the country, although it's not been as bad as previous years, but the rial is still tanking. It's hitting successive record lows against the dollar in terms of its weakness. So the depreciation of the currency is something that I don't think that they can really stomach much more of. And also they're lacking massively in foreign investment. They're desperate for fresh money and cash into the infrastructure.
Does talks with Europe make any difference when we know probably that the Americans, with Trump at their helm, are going to go in hard at the beginning of January? The expectation is that we're going to see significant pressure being once again applied.
Yeah, I mean, that's the big question mark, is exactly how is Trump going to approach Iran this time around. But it's important to also say that these talks, they're not the same as the main nuclear negotiations that we've had before. This is just between Iran and the E3, which is Britain, Germany and France, and in Geneva, which is always neutral territory, obviously, for Iran. And symbolically, it has value because Switzerland is where the JCPOA was agreed in 2015. So they need, obviously, the US, China, Russia, Germany also but the other members of the UN Security Council to come on board. And for there to actually be an official agreement to start the actual nuclear talks again and revive those. And that obviously requires the United States. I'm not sure what they're going to achieve with this. My sense is that they're probably going to just talk about ideas over how to approach things and how to manage Trump when he comes in. And the Iranians have called this a brainstorming session as well. So I think this is more about just throwing out ideas about what they could do and the posture that Iran ought to take.
I mean, you hinted at it, and you've got a fantastic piece about it on the Terminal. Just how different is the domestic economic situation in Iran compared to the last time we had a Trump presidency?
Well, in some ways, it's just kind of got worse. In other ways, I think there's a lot that shows that Iran has built some sort of resilience, because materially there's not much left for the United States to sanction. I think the thing that they are very concerned about, the Iranians, is the return of those UN sanctions. So the UN resolutions that kind of approved of the more internationally binding sanctions, those are much more of a major political risk for Iran at this stage. US sanctions are bad enough, but then for the UN to invoke that so-called snapback mechanism to bring in those wider international penalties, that's going to be, the chilling effect is going to be much worse.
Gulnar, I'm going to put you on the spot here, 30 seconds. Walk us through the connective tissue here between the war in Ukraine and Russia, given that Iran and Russia have exchanged technology. What does that look like?
So, I mean, Russia is a very important strategic ally to Iran at the moment, but it's important to remember if Iran had a choice, it probably would not be as close to Russia as it is right now, especially in terms of those weapons transfers.
Gulnar, nice to see you. Thanks for stopping by to update us on these talks that are going to be taking place a little bit later. Gulnar Montefiore joining us on the Iran story. Coming up, we're going to talk tech. Get back to that story. Claire Playdale-Bouvray joining us from Lion Trust Asset Management, just back from Silicon Valley, giving us an update on what she learnt about what the dominant themes are and what we are going to be looking at heading into next year. That's next. This is Bloomberg. So what I'm imagining is that trading screens that normally are filled with kind of Bloomberg terminal stuff are this morning filled with shopping and other things that are happening, because it is Black Friday. Volumes are a little on the light side. I think you're going to have to wait until Monday to get a clear signal as to what is happening here. So I imagine that people are just waiting to see. Have you turned up at your trading desk this morning? Some people have, some people clearly have not. But this gives us an opportunity maybe to think about what is going to be happening next year and talk a little bit about this tech trade that has driven markets, particularly in the United States, this year. Nvidia's massive gains underline just how dominant the AI narrative has become on Wall Street and around the world. The biggest US companies are, of course, all exposed to artificial intelligence to a differing degree. They also feature heavily in this year's top stock performers. You've only got to look at Nvidia, but there are plenty of other names as well out there. Claire Playdel-Bouvray, fund manager at Lion Trust Asset Management, recently back from a research trip to Silicon Valley, joins us around the table to set us up for next year. Good morning.
Morning, guys.
Nice to see you back. If you were to, I read your notes this morning, and there's a lot in there. If you were to distill it down, what is the one takeaway you would take away from your trip about what is happening in terms of the momentum that still exists or doesn't exist behind AI? How is the narrative changing?
So the pace of innovation is simply breathtaking, and that's why we're actually going out to Silicon Valley every quarter now. We used to go out every 6 months, and in order to keep up with what's going on, we've had to go out every single quarter, because what we're hearing on the ground from these companies, the market we're finding is just a couple of months behind. So it's really invaluable for us to do boots on the ground research.
Where's the market behind?
I think it's where these companies are going over the next 5 years. We've got a better understanding of what Nvidia might be printing next quarter, but when we sit down with these companies, we're not focused on what are gross margins next quarter. We're focused on what are the innovations that are actually going to be driving this platform technology shift over the 3 to 5 years. And I think one of the key takeaways from last week was that we're getting a better understanding of which companies are on the right side of this shift and which ones aren't. You get a tangible sense of the management teams who are feeling confident at this stage.
OK, so let's break this down. When it comes to robotics, they're about to have this ChatGPT moment, apparently, where AI can effectively see. What are you most excited about in that space in 2025?
So with robotics, the breakthrough that we've seen this year has really been around the vision transformer. So if we think about ChatGPT's light bulb moment, and this is a large language model essentially predicting the next word in a sentence, here we've got this vision transformer which can predict the next pixel. We've only recently seen this breakthrough. The first use case is going to be in autonomous driving. Tesla are really pioneering that because they're the only company in that space that have adopted a vision-based approach. So they've got cameras on their cars, and AI is learning from what it's seeing. We expect that from 2025 into 2026 really to be applied more broadly into robotics and have a huge impact on the industrial base. But it's still very early days there.
And the other one is this AI agent technology, right? The shift from AI assistants to AI agents. What makes an AI agent technology more successful than its peers from what you're seeing when you went?
So the shift from software sort of 1.0 to software 2.0 is that was very, very obvious last week. This has begun. And so software 1.0, if we think about what that is, this is what we've all been brought up with, what we live in every single day, thousands of lines of code that essentially tell a computer how to act in a given situation. Software 2.0 is, you've got it's neural networks. So you have an AI model infused into the software, and it's capable of deciding the best course of action by itself. So software 1.0, the unit of compute there is the CPU, Intel, AMD. The operating system, predominantly Microsoft. Software 2.0, the unit of compute is the GPU. The operating system is, in fact, NVIDIA. And the ramifications that we believe this shift in software, the ramifications for both software companies and hardware companies, we think is significant. Because if we think about all of the very large incumbent traditional software names, the Salesforces, the Adobes, the Intuits, the Workdays, even the Microsofts of this world, these are all poster children for software 1.0, the deterministic software era. We don't think that that is going to be how software is run in 10 years' time.
These are largely quite long-term plays. I mean, the thesis you've made here today, but then also in previous iterations, that you're kind of getting ahead of it in terms of a very long-term adoption process. But in the short term, exposure to some of these tech stocks have come under quite a bit of antitrust scrutiny and regulatory scrutiny from Joe Biden, from Donald Trump as well in his previous iteration. It's likely to increase in the next administration as well. And that is starting to show up in the markets. Tiny moves at the moment. But is the regulatory concern and scrutiny something that people in Silicon Valley are talking about?
No, actually. And obviously we do consider these factors. We think for the most part, particularly when we're talking about the silicon companies, the semiconductor equipment companies, these tail risks are more than priced in. You look at a company like Applied Materials trading now on 18 times forward earnings. You can't make an NVIDIA chip without this company. It's very refreshing talking to these management teams who aren't concerned so much about the nuts and bolts, because what we've always continued to underestimate over the past couple of years is just how insatiable the demand is for this AI compute, and capacity constraints just from the basics of GPU point of view. Sure. Those still remain true today. So whether we see China completely drop off as a sort of market for these companies, we think that demand just moves elsewhere. We're already starting to see this emerge in the likes of India, Middle Eastern companies, France, Japan. They're all building out their own AI infrastructure. The UK as well.
So what about then, you mentioned that keyword capacity constraints as well. When we think AI, we suddenly start to talk about electricity, power, grids, et cetera. Is there enough for that?
There is enough if companies so there are two options that companies are faced with. You either have to upgrade your technology, so your compute, to be more energy efficient, or you have to upgrade your energy and electrical infrastructure. And we think the companies are going to be compelled to go with both options because, as you say, the energy requirements for AI are an AI data center is about 10 times more power intensive than a traditional data center. So on the energy side of the equation, this means opting for the most cost-efficient solutions. We think that nuclear is an option that companies are going to have to entertain. We've already seen 3 Mile Island restart with Microsoft, but really all options will be explored there. Renewables will be an important part of the mix as well. But on the technology side of the equation, this is where customers have a real incentive to upgrade onto the next generation of technology. So TSMC's 2-nanometer node coming into production, mass production from next year, that brings with it 30% energy reduction requirements. The same with NVIDIA's Blackwell systems. This is a 4-fold reduction in energy requirements. Applied Materials gate-all-around technology, that's another 30% energy reduction. And so what we were hearing from management teams on the ground last week was that this drive for energy efficiency is really the overwhelming structural growth trend, particularly in that silicon layer of the tech stack.
Can I come back to Microsoft and the other companies that you mentioned a little bit earlier on? They're investing in nuclear power. These are big companies with significant financial firepower. As they look at the landscape in front of them, to what extent can they acquire what they don't have? It's interesting listening to what Amazon has just done in terms of its investments. Microsoft, big stakeholder in OpenAI. Are these companies simply just going to go in and acquire where they have weakness? Is that how they ultimately end up saving themselves? As the kind of the OpenAIs, etc., start to run out of money or become increasingly financially challenged because of the investment they have to make, do their original investors basically just step in and say, you are now becoming my AI department? Is that how this is going to work? And is that process already unfolding? Because there's got to be a kind of moment in time where you go from the way you describe 1.0 to 2.0. Isn't there a kind of clean-out process that happens in that, a reordering that happens in that process?
It's an excellent question, and we think there is a clean-out process. We think for the most part, a lot of these companies actually, they don't want to sell, because this is the very first time that we've actually seen a proper challenge to a lot of these software companies. And it's not even just software. We think about Google, Alphabet being challenged by Perplexity. I don't use Google anymore. I think Perplexity actually gives me answers as opposed to sponsored links. But a lot of these AI startups are providing better solutions at a fraction of the cost.
Yep.
And for that reason, they're actually not willing to sell to
Can they get money from elsewhere, though? And doesn't Microsoft or Amazon have first dibs? Can they? Amazon clearly is just sort of watching this story develop and is waiting. Ultimately, it keeps putting money into Anthropomorphic, and ultimately, at some point, you've got to assume that that's a takeover.
I think that they will try. Not necessarily Amazon Anthropic. I don't think that Anthropic would necessarily sell. And I think they will try to acquire some of these AI companies. There will also be regulatory oversight of that. But as we also see the VC market turn, there might not be the financial impetus for these companies to sell as well.
Anthropic, that's probably a better way of saying the name, rather than one that I said. Claire, nice to see you. Thank you very much indeed. Claire Playdale-Bouvry, joining us from Lion Trust Asset Management. Thank you very much indeed. Talking of shopping, it's Black Friday. We're going to discuss all of that next. We're getting a view from MasterCard. We'll talk about maybe what you should be putting in your basket. We were heard from Max Kettner earlier on. He wants lawnmowers. We're going to be hearing about what else you should be putting in there. Coats, apparently. Very cheap this season. This is Bloomberg.
Welcome back to the opening trade. We're about 45 minutes into today's session. Red on the screen, light volume, light liquidity, but underperformance, I think, is still the name of the game here in Europe. You are seeing underperformance even further in those French indices. We are keeping an eye on what's going on over in France and those budget talks. Perhaps a little bit of volatility setting the stage on Monday. In the meantime, we are looking forward to perhaps something a little bit more fun. Black Friday shopping. I'm told it's happening today. I think I'm the only one around this table that's participating, but that's a different conversation. MasterCard Economics Institute is forecasting spending in Europe will be up 2.9% in November and December compared to last year. Joining us now for a little bit more on that is Natalia Lekmanova, their chief economist for Europe. Natalia, I'm tempted to ask you what you're going to be looking for on those Black Friday deals, but let's start off with the fact of the European consumer. Are we doing better on a consumption front? Is there more disposable income sloshing around in this region? How are you thinking about it?
There is, which is why we are excited about this holiday season. Consumer fundamentals have improved compared to last year. If we look at the labor market, it remains resilient. It's defined by historically low unemployment rates, which in most countries have declined further this year compared to a year ago. Headline inflation is close to target, yet wage growth is still elevated, which has meant that growth in real disposable incomes has been strong, allowing for that recovery in purchasing power. And lower interest rates are beginning to help some households, those with variable mortgages, to ease the mortgage squeeze as well. So we see that improvement in fundamentals in consumer confidence, which is also better than it was this time last year, albeit in a lot of countries we're yet to recover to pre-pandemic levels, which is why consumers are perhaps still mindful. They are saving a higher proportion of their income, whatever they're not spending, and they typically still look for value when shopping.
What does that look like in the context of inflation, though? I mean, we were coming off of several years where the conversation, and I would argue the conversation is still very much in the central banking space, that inflation is one that is hard to wrangle. And inflation, even today, we got numbers that are still kind of ticking up a little bit higher in France. And we've even seen it in Germany, not to the extent that warrants worry. But is that eating into that appetite for consumption at all, or is that not a factor anymore?
I think the whole the recent period of high inflation and subsequently high interest rates has made consumers more mindful about how they spend their money. As I mentioned, they are saving higher proportion of their disposable incomes, despite the fact that that gap between inflation rates and wage growth is really strong. and they remain price sensitive. How do we know that? So, for example, when we look at how consumers spend on, let's say, fashion, and we bucket the retailers into budget retailers versus premium retailers, we see that the share of spend dedicated to budget categories continues to expand relative to those premium categories. Interestingly, though, in countries where consumers are in a better shape, for example, those in Southern Europe, in countries like Spain or Greece, we are starting to see some of that price sensitivity to unwind. But this is why Black Friday is such a big deal. Last year, this price sensitivity led to a surge in spending at upmarket retailers during Black Friday, as those discounts allowed consumers to trade up from mass to more premium brands. And since price sensitivity remains prevalent, since people still worry about the macroeconomic outlook, about inflation, we expect the same to happen this year.
I had to chuckle at your note, Natalia. Lizzy here. All these sunny destinations that people are flying to for the holidays, including Manchester. Where are people going this holiday period with their money?
So, of course, travel is a big part of the holiday season, whether we go and visit loved ones or we take advantage of the extended time of work. So, of course, we looked at airline bookings for this holiday period, which again we define as November to December this year, and then looked at the top trending destination, which we define as those where the number of bookings is higher than what is typical for that destination. And for Europe overall, we definitely have, as you mentioned, those warm and sunny destinations. 4 out of top 10 are in Spain, places like Tenerife, Alicante, Malaga, the Canary Islands. Then we have Portugal, Morocco. We also have budget-friendly cityscapes, including Budapest, Krakow or Dublin. And then, as you mentioned, the standout destination, Manchester, which granted has surprised us too, but it has likely gained attention due to the recent opening of Co-op Live, the UK's largest indoor area, which is hosting many big artists. And we know that consumers, since the pandemic, have preferentially spent on travel and on experiences, including live events.
Maybe it's just the City fans that kind of are returning home after all the dismal performances that we've seen recently. Natalia, let's talk about what next year is going to look like and whether the expected trends we're going to see coming out of Black Friday are going to continue into next year. Can we extrapolate any of what we're going to see over the next 24, 48 hours in terms of your numbers into what the consumer is going to continue to do into 2025?
Well, consumer fundamentals, as I mentioned, are quite strong. We do not expect a deterioration in the labor markets, where most of the countries are still experiencing a lot of labor shortages. Wage growth, although it's going to come down a little bit, the gap between wages and inflation is going to remain positive. So consumers will continue to recover that purchasing power, not only relative to last year, but also relative to the pre-inflation period. And then interest rates will continue to go down. So again, that mortgage squeeze is going to ease. And perhaps more importantly, those elevated household savings rates should begin to normalize with lower interest rates, as the incentive to keep money in the bank is going to be somewhat reduced relative to what we have seen this year. So we expect continued outperformance of consumer relative to perhaps the rest of the economy. And we'll just have to see how consumers are really changing their preferences, shifting around that consumer wallet in terms of how they allocate their spend.
Natalia, great to catch up. Thank you very much indeed for the insights. Natalia Lekmanova, Chief Economist for Europe for MasterCard, the MasterCard Economics Institute. Thank you very much indeed. Talking of the weekend, you're mentioning Manchester take on Liverpool, something of a grudge match. City are not playing well at the moment. Liverpool are playing quite well at the moment.
As a South Mancunian, I don't care to talk about either of those teams, Guy.
OK, well, maybe you can watch the F1 in over the weekend in Doha.
Well, I just came back from Doha, and let me tell you, it's a good job they've got something else to talk about, because all of the signs for the World Cup from 2022 are still there. They need something new. Well,
OK, so we'll see whether or not the F1 will provide that. Shopping, though, that's what Kriti's going to be doing this weekend.
Yeah, Christmas markets also. I'm ready. I'm so ready for Christmas and for Christmas shopping, and I just don't know why you're not on board.
Because you can't put your tree up until A, it's December, B, at least... OK, so this weekend it will be December. So next weekend, probably, I think we can put the tree up.
Next weekend? Oh, my God, that's horrible. This only means you only have 3 weeks for your Christmas tree. That's horrible.
That's fine.
That's why you do it in mid-November, so you double the time of the joy.
Yeah, that sounds like something you want to double the time of. You got to manage expectations, though. You can't start too, particularly when you've got children, you can't start too early. Expectations get kind of a little out of whack.
I don't know. I've got a fur ball. Harvey, my dog, he's very excited. He loves this. He's also on the Christmas bandwagon.
I imagine he has a jumper. Let's carry on the conversation.
He does.
I don't want to know. I don't want to know. I imagine he's got multiple jumpers. Let's talk to Andrea Felsted, Bloomberg opinion columnist covering consumer goods and retail. I talked to you yesterday about kind of what this is going to look like, and your expectation was actually fairly positive. Can we just drill down into that a little bit more specifically? One of the trends that's come out of this year has been less goods, more services. Is that a trend that gets reversed around this time of the year? Does it start to... What does this tell us about whether or not that trend has got legs?
Well, I think that trend might have peaked, actually.
Ooh, okay.
I'm a little bit less bullish on travel. I think we have been travelling...
Peak travel is here.
I think peak travel... Well, we know peak travel's here. We
keep saying it, but actually...
It keeps going. Yeah, it does keep going. But I think we are past peak travel. We've had, a lot of years of travelling now since the pandemic reopening.
Yep.
Prices have gone up incredibly.
Yep.
I think eating out has probably peaked. One of the things I'll be watching out for is people eating out less over Christmas, eating home. The supermarkets, particularly in Britain, are really prepared for people to eat more at home.
The frugality is ruling.
Look, OK. I want to talk about the sequin index, because if we're not going out, do we need to buy sequins? Lizzy Burden likes a sequin.
I do like a sequin and a feather.
Does that mean there's going to be too many sequins?
Oh, there's always too many sequins. They always
I would agree with that.
They always overbuy sequins. January, always those sequins on the rails. Particularly if we are going out a bit less. Cost of living crisis, particularly in the UK, has not gone away. Confidence is weak. I think this Christmas will be harder than I thought last year that this Christmas would be good. I think this Christmas will be OK in the UK. I don't think it's going to shoot the lights out because we have had that weigh on consumer confidence from the budget.
Yep.
I think we are going to see maybe a little bit pulling back of going out. If you look at all the Christmas ads from the supermarkets, they're all gone back to basics this year, featuring lots of food. They're expecting food at home, entertaining at home to be bigger. So that then you don't need as many sequins. You might buy a sequin top to wear with your jeans. You might buy a sequin skirt to go with like a nice sweater, but you won't go head to toe sequins that you might, or a sequin dress in the same way as you might if you're going out.
All right, Bloomberg opinion columnist Andrea Felsted, who I'm going to take with when I go shopping for Guy's sequin tie. I think that's what I'm going to put on the
thing.
It is now on my Black Friday shopping list. We're going to find one for Guy Johnson. In the meantime, quick check on these markets. We are seeing red on the screen. Light volume, light liquidity. That is the story there. But I'm going to leave the show with a potential live picture of Notre Dame, the cathedral, of course, where I believe Emmanuel Macron is expected to see it this weekend. It is reopening next weekend, December 8th. I am told very pretty, very looks like
sunny.
Very good job. Sunny in Paris, getting ready for the shopping there as well. That does it for the opening trade. Happy Black Friday, happy holidays. Enjoy the Christmas tree putting up if you are this weekend. Stick with us. The Pulse is up next. This is Bloomberg.